Hey guys, and welcome back to the ASX Investor channel, and welcome to another CEO interview. Today, we've got a fascinating interview for you. We're going to be really unpacking and deep diving into a story that we've visited before, but really having a broad overview and a comprehensive discussion about the story of Cirralto. We are unpacking the ASX CRO story, talking about the recent quarterly activities report and a big past quarter, but it's been a truly transformative year. So the idea today is really just to have that discussion and explore where CRO is currently sitting and what to look forward to over this next year and further beyond. We're welcomed once again by the CEO and Managing Director, Adrian Floate. He's a favorite on the channel. Welcome back, mate.
Thank you for having me. It's good to be here.
It is great to have you on the channel. You've had a big past quarter. There's a lot for us to discuss, but we'd love just a quick current state of play update for where Cirralto's sitting and how your reflections are over the past quarter that's just come and gone.
Yeah, look, the last quarter's been really massive for us. We've taken a whole bunch of next steps, if you like, in our journey. So, right from our focus on onboarding and attracting more customers, the way that we've, sort of expanded our transaction capability, that's been, fantastic. And I'm really pleased that we've got those scaling deployments out. And then, separately to that, we obviously did a lot of buy now, pay later development work. And I suppose what we would call buy now, pay later plus, where we've really enhanced the concepts of what you could do with buy now, pay later in a number of fronts. So that's been really exciting. The debt warehouse work's been really exciting because that's really critical to where we're going and the ability to fund the gap that exists between buyers and sellers. So it's been a massive quarter for us, and we ticked all the boxes we wanted to tick internally. So we're really happy.
Cirralto is obviously a company that's continued to evolve over the past period. You've added on capabilities. Can you just sum up where you're currently sitting and really the vision of how Cirralto's arrived here?
Yeah, well, look, if I was to take my own life journey, it would probably look like this. I learned an enormous amount about how a supply chain was shaped when we got into EDI back in the 90s and we built the BIT system for Bunnings. And that kind of gelled in my head. Okay, I get it. Demand will respond to supply. That makes sense. And then we learned a lot about point of sale and how if you connected the point of sale to the way in which you procured, that would really streamline operations. And then if you studied the invoice coming in from your supplier, you could do price testing and price variance management straight away. And so that was a really valuable lesson in if a retailer doesn't pass on supply price changes in real time, it's just giving up margin. And obviously in a big business, that's a lot of money, but in a little business, that's meaningful amounts of money. There wouldn't be a $1 million business around that doesn't want to, have an extra 50 grand in their skyrocket just from better administration. So I guess moving forward, as we moved into understanding buying groups and other things, and when we built the Kaplan solution for Capricorn, what it became really clear was there was an entire market out there that just needed certainty about payment. And obviously over the journey, looking at distributor businesses, even looking at my father's own business and seeing him constantly need to, go back and borrow money from banks and go back and remortgage and all those sorts of things for a really long period of time. Maybe, I think in his commercial life, maybe 20 years of constantly doing that. And then, the last 10 before he sold was not so much. But that whole cycle was really all about customers not paying him on time. So I suppose I had consistent and repetitious experiences where we've seen this fight between the sales guy who's rewarded for selling, but not selling and guaranteeing a payment outcome. So just selling. And the same thing on the other side, where you've got a finance part of a business that's rewarded for collecting, but again, they're not in control of how the sale happens. So when I kind of look at that objectively, to me, it's about, in the same way that, a Walmart wants to control its entire supply chain or be vertically integrated, we look at the flow of information in the business like vertical integration. So if we can create a transaction that's less friction from sale to invoice to payment, and we can fund that in the middle, well, we can give the, if you like, the best of both worlds, because the biggest discount that's given, it happens in the sales process well before there's an invoice. And the finance industry has locked itself into when I've got an invoice, and we just happen to be a software company that can control the sales piece too.
So from there, it's interesting. You talk about the vertical integration of the value chain all the way through. You've got a range of different pillars that you can offer. Of course, the Spenda software solution, you have the ability to offer trade financing as well. Can you talk about the different pillars that you have, exception of payments, and how Cirralto is positioned across all of those?
The software itself is a commodity, and a software business will make its money out of a software license, whether that's a subscription or otherwise. And we really wanted to use the software more like a vending machine for the transaction. And the payment, really the payment services are all about being able to disconnect when a supplier gets paid by a customer versus when a buyer actually makes the payment. And around that, we've built a transaction engine that gives us certainty of collection. So if you look at our buy now, pay later service, what we're ultimately doing is saying to the supplier, here is payment certainty. And when you do a transaction and you issue an invoice that's confirmed as good to supply, we will pay you. But at the same time, we will also set up an ongoing set of variable direct debits with the buyer. So every time they transact, there's a future dated direct debit coming that gives us certainty that we will collect the money that we've already advanced to the supplier. So essentially, we pull the supplier out of the debt cycle altogether. They're now operating essentially on a cash on delivery basis, which from a distribution perspective effectively means no accounts receivable. Now, the really exciting thing is we can mix and match that payment rail. So we could allow a supplier to get money on demand out of their traditional receivable book. We could allow them to offer their customers an early settlement discount and then manage the flow of funds from the customer to the supplier. We can also do the buy now, pay later, but the ingredients are, I've got a party that wants to make a payment. When do they want to pay? And because we've got a user experience that supports flexibility, it's completely different to jumping on your internet banking and creating an EFT, because it's about the transaction flow. It's about doing the business like you would in an e-commerce experience, and then forgetting about the risk of, will this person pay me later? So that really means we want to drive that opportunity through every sales channel. So from internal, say call center sales or email sales, e-commerce, marketplace, mobile sales reps, all those channels we want to facilitate the exact same rail for. So whether it's a packet of chips making its way to your local convenience store shelf, or the way in which a farmer buys fertilizer and chem, there's a recipe that fits that, and we just happen to have the ingredients to do that. So we see ourselves very much as a global business. We haven't built this to be great in WA or great in New South Wales. We've built this as a capability to roll out everywhere. We're at our stage in development where we're rolling it out here and as in Australia. But I think the market will see soon. We're starting to really bring to the table things that have got global capabilities. And I think that's really key for any technology investment is not, can this make cash flow today? Is this technology capable of dominating a segment globally? And that's very much the way that we've set about making our investments in technology and systems. So yeah, it's maybe not a very Australian way to do it, because we get very obsessed with near-term cash flow and completely disconnect from the fact that that's irrelevant to how do I take this from here and put it over in the US, or put it in any other market for that matter. And that's far more our agenda.
And this is an interesting point because you have the ability to offer flexible payment terms across the different parts of the value chain because you own the different capabilities now. And I think that's a fascinating point. Can you talk about why you have this competitive advantage and how you've gone about acquiring it over the past period?
Yeah, absolutely. So, I mean, the sales capability's been there for a long period of time. So helping businesses to be able to sell. And I guess if you look at our retail offering, you know, I think I've said before, I really admire what Square's done. But for us, what that means is we've got a retail solution that combines, especially now the Greenshoots capability sort of joins the family as Spenda e-commerce. So we've got this e-commerce end, this point of sale end. So all of a sudden we can do really complex, generally enterprise style e-commerce things like click and collect and automatic ranging, and we can do franchise configurations of that sort of solution. And then we add the payment. And so for us right now, we're really going, well, you can have all the software for free. We'll take our revenue out of the payment. When we start to get a really more significant acceleration point is when we look back into those retail businesses' supply chains and say, hey, you know what, if you want to turn on a finance service with us, if you want to buy now, pay later service with us to deal with your suppliers, we'll give you an even better rate on the payment. And so we can keep layering in, and we can put a fair bit of sunshine between our nearest competitor's best rate and us, because we can blend those things together. And it's, you know, those things are starting to work now, and they don't happen overnight, and you certainly don't want them to happen in an uncontrolled manner. And that's what I mean by tempered growth. Is we need to put ourselves in a position where this is highly repeatable, and you know, our internal messaging is all about boarding. And once you've thought about boarding, think about it for another 5 minutes and make sure the user experience to get on is so easy. And then you know, from a systems perspective, you're talking about connecting and scaling. So how many transactions can I do in you know, a second? And how many businesses that really practically support? And that's an interesting question, because different businesses run at different tempos. So you've got that as a sort of the first thing. And then when you talk about funding the gap, a payment flow, you're really not having to put any money there. So, you know, you take a card payment or you take an online payment, the money is through the banking rail and the card scheme rail within, you know, T+1 and off to the person, you know, to the seller straight away. But if you want to disconnect that flow so that the buyer doesn't have to pay via that card rail straight, you know, up front, you have to be able to fund it too. So you're still going to take the payment, but you've got to fund the gap in order to have that competitive advantage. And so we've assembled that capability and that capability set partially by just having the vision to see that there's a great opportunity to do this, but then secondarily by building and buying where it's been appropriate. So very important acquisition of Invigo as a capability goes. And obviously we want to do as much blending of everything as is humanly possible, and where it's appropriate. I mean, obviously it makes sense if you can sell something to a customer and clip if you like, the ticket 3 times from them, that makes them a far more valuable customer than if you, you know, just sell them, you know, the smallest thing you've got. And obviously, therefore, we want to, you know, utilize our customer selection really quite strategically.
To help to conceptualize it for the viewers, because there is so many different moving parts to it. And of course, every customer that you onboard is going to have different needs and different wants. But are you able to give an example of if they were to take a little bit of every aspect that you offered at Cirralto, how a transaction would look and which different parts of the ticket you'd be clipping along the way?
So I suppose the first thing to kind of understand is that we are a experience for buyers and sellers. And you can almost go to anything and say that they're a buyer and seller at some context. So a consumer buys off a retailer, that's one context, but a retailer buys off a wholesaler / distributor, that's another context. But the distributor buys off the manufacturer, and that's another context. And the manufacturer, will they buy off their input suppliers that they then utilize as ingredients to build something? So everybody is a buyer and a seller. So that's the first thing that you need to understand. But all those buyers and sellers, they connect to one another. And each one of those buyers and sellers, when they connect, they've got a cash cycle. And it's our ability to connect those cash cycles, which is really exciting. So if I start off at the retail end and we look at our retail solutions, if we offer someone a payment service that's got, connected to POS and e-commerce, and maybe it's got some innovative stuff like pay invoice by link and those sorts of things in there, we might make 0.7 out of that percent, out of that transaction flow. And if we just pretend that business is turning over $1 million, we can pretty easily quantify them as a $7,000 a year customer. That's roughly the economics. When it gets interesting is if we then turn around and deal with them in the supply chain. Because if we give them a buy now, pay later service, we're probably going to pick up another 2%. So now we're at sort of 2.7, but that payment flow will be smaller because obviously they're marking up the goods they buy. So a retailer's procurement is maybe going to be half, like 500 or 400 grand. And so that's about a 20 grand a month flow. And if you look at that simply, if you do that a lot of times, it doesn't take a rocket science to realize that if you've got, $20,000 out with, even 10 businesses, it's a reasonable amount of money, but 100 businesses, it's a decent amount of money. But it doesn't take, 1,000 businesses, again, it's significant money. And I guess that's the key then, is when we want to fund that into the supply chain, well, we've got another clip there. But if we come around the other way and look at it from the supplier's perspective, the supplier wants to turn everything into cash. So that's what we're calling a node. Well, we can make 2% there just by giving them payment certainty and de-risking their business. And the thing is, because we can blend the sale, the invoice, and the payment, we're actually taking our margin, if you like, out of two areas of that business's cost structure. So one is physically having to bankroll the funds that they're owed, which is obviously expensive. A lot of businesses will work on a 15% internal cost of funds. And that picks up all the labor costs and everything else that goes with the, hey, can I have my money, please? So there's that bit. But then after that, you've then got the sales discounting. So we're really trying to help businesses change the narrative from just selling to please sell and use this system to guarantee that I get payment. And then we can truly, really sort of flex that disconnected monetary flow. And I suppose in each of those scenarios, we can keep rolling the same thing down. So the distributor back to the manufacturer and so on and so forth. So we are starting to see that spider web emerge, and we are starting to see customer acquisition numbers move more virally. And we're sort of coming to the end of trying to control that too much. Boarding is a real, and rapid AML KYC and all those sorts of things are really at the heart of our scaling journey.
And of course, we had a recent example of that node spoke strategy with the agreement from Whola with a 30% adoption rate. It looks like it will bring in over $1 million of revenue per annum. We'd love just to hear your thoughts about the actual agreement itself, but also what investors should be looking for that potentially may be replicated in upcoming deals as well, moving forward with different nodes.
We've made no secret of the fact that we think that marketplaces are a fantastic, I would call a marketplace a digital distributor. So they take all the best bits of a sales channel, if you like, a distribution channel, but they don't hold the inventory, generally speaking. So they've got all the best bits of a dropship e-commerce vendor. So the reason we're really targeting those businesses and want to do more and more of that stuff is that at the front end, you've got customer aggregation, so all the buyers, but you also get transparency into the supply line and aggregation again, because that's one of the key benefits of these marketplaces is ranging goods and being able to find what you want and find it in one spot rather than hopping through 10 different suppliers' websites and saying, I'd like to buy that, or talking to 10 different reps. So convenience is a big part of why these models are so successful. And it's almost vertical specialization in a digital format. So we'll continue to do more and more deals. And we think deals where there's demand and supply aggregation at play, they are a really good fit for us. And there's a number of those sorts of transactions that we've been running through pilot programs that we would expect to be full commercial solutions in this quarter. So that's pretty exciting.
And then talking about the quarter itself, would love just to hear your reflections on how the past quarter went and some of those key highlights as well that you took out of it.
Well, I guess if we start off with the technology, the first thing was to build, some real capability in from a scaling perspective. We didn't want to find ourselves in a situation where customers had to wait for the approve, and we could see the transaction cycle starting to ramp up. So that was, I guess, the first thing. We've been putting a lot of effort into performance. Again, and they're all sort of pieces of the jigsaw. We obviously moved down the route of the debt warehouse. And that's been really exciting works where we've committed funds on balance sheet to really cornerstone that. And we've got, I suppose, our securitization strategy in play, so we can be buying money at a price and then marking it up and selling it at a higher price and keeping the gap in the middle. So that was pretty good. And obviously the buy now pay later launch, well, all that work sort of came to a head in the quarter just gone, but we didn't really see it contribute on the revenue line, which is quite interesting. But it has given us good telemetry for what this quarter looks like. And the reason that's the case is we don't record the revenue at the point of the first invoice. We're recording the revenue at 30 days after the transaction. So we didn't really pick up anything of any note at all from the new buy now pay later structure. And then I guess separately to that, really to support our relationship with Fresh Supply and Mastercard, we've built ourselves an agri team. We've really got some good people, as well as some really good deal flow. And we've done a number of transactions now in agri, which are really exciting ones. And it's really important for people to realize that some of these things they're just business as usual now. So we're not going to announce the opening of every envelope. Our real focus is going to be on announcing deals where they've got tactical significance, or maybe they're the first of this kind, either with the technology or the segment. So that that's pretty exciting. And I mean, all in all, everyone's working pretty hard, and we're really looking forward to the run into Christmas. But I'm really happy with the way that the quarter unpacked, and I think the team did a great job.
And I did want to talk to you about revenue. We know that there was a huge variance in kind of expectations of what people were anticipating. I've heard you mention that you were hoping for a 40% benchmark moving forward for growth. We'd love just to hear your thoughts about what your expectations are and what should investors be looking for, particularly with the knowledge that Cirralto's model does have the possibility of exponential growth with the virality of it. But of course, as you mentioned, it's not about cash flows now, it's about the future opportunity up ahead.
Well, the 40% was our internal target, and we thought that was pretty gettable. And really at the moment, so if I look at immediate term agenda, it's really how do we maximize the balance sheet that we have right now, and how do we utilize that to further accelerate revenues. So there's no question that we want to do better than 40% this quarter. I have heard people mention that they thought we were going to do 300% last quarter, and that just was never realistic. I'm not entirely sure that when you say we're going to go from sort of crawling to walking, that 300% represents walking. But maybe it does to some people. But but anyway, from our perspective, we had a really fantastic result. Obviously, the quarter that we just unpacked didn't include Whola. It certainly doesn't include a number of new customers that we're we're really pleased to be working with. I think people are really trying to get a handle on how many customers does this mean? How many customers? How many customers? And at some point in time, I guess that'll stop being irrelevant. Sorry, it will stop being relevant, I should say. But yeah, I think investors should expect a better than 40% result in this quarter. I'd be disappointed personally if we didn't hit that mark. I certainly don't think investors should be expecting 300% growth. That's not our internal target. So, you know, if that is the expectation, I'm sorry, you're going to be disappointed straight out of the gate. But ultimately, the back end of this year, and I've spoken about this a fair bit, is all about setting up 2022. So in 2022, we want to be in a position where we can do, you know, cross-border buy now, pay later. We think that's a massive untapped market. No one's done that yet, and that's a huge thing. So, you know, that's an exciting thing we've been cooking up. We've reimagined a whole bunch of things which have currently got terrible branding names, but I'm sure that the marketing team will come up with better names for them. But where we're really looking at existing financial instruments and how they can be reimagined for a digital use case, you know, in a contemporary world. And that is, you know, where our, you know, I suppose that global outlook is. In the digital context, it's a small world. It really is. And I was chatting to someone yesterday at the Southwest conference who was telling me how they were offered a seed position in Zoom, but because it was a US transaction, it was $500,000 was the minimum buy-in, and that probably is at the heart of what's different between us and US vendors. A US opportunity, they 100% look at, do I have a global capability here? Is this something that everyone could use? And if it is, what's the funding they need to do that? And how can we run small experiments in wherever we are to demonstrate what we're doing is going to work? We have the opposite approach. We think, oh, the company's from Perth. How many customers can they have in Perth, or how many customers could they have in Sydney? Or we ask the question, when will you go to the US? Which is a really narrow question. It doesn't matter what global market it is. If you've got a global capability, you have to be able to build structures that get you there. And structuring takes a lot longer than you would think. It's not just about tax. It's about having, you know, bank accounts in the right spot. I have to tell you, opening up facilities in Singapore, my God, I have never in my entire life had to stand with my passport and my driver's license and say interesting phrases repeatedly in front of a camera. It's very frustrating, but you got to do it, and you got to do it a lot. So it's one of those things where you just can't underestimate, you know, the time it takes to implement structure. And, you know, for us to be able to fund the gap globally, as I said before, if you just go to the smallest business and use that $1 million turnover retailer, where there's absolutely thousands of those in Australia, there really is. That's you know, that's our bread and butter sort of employer. And you look at those businesses and you look back into their supply chain, it doesn't take a significant amount of effort to start to manage lots of payment flow. But if you apply the principles of that to global markets, you are talking about significant amounts of money that need to be banked, and our debt warehouse and the way in which we're going about establishing it really do become the most critical building blocks. Because it's, you know, I talk about it like a train internally. There's not a lot of point in having a train that's got empty passengers. Equally, there's not a lot of point in having a train where everyone's falling out the side, because you just don't have the capacity to manage them. So the train needs to be able to add carts systematically and on demand. So we need some more capacity. Let's spin it up, and that's the stuff we're really focused on. So, you know, it's the little things. Security, super important. We don't want to find ourselves, you know, opening up security holes that we don't expect. And at the end of the day, the bigger we get, the more we're going to, you know, be targeted.
There is a lot going on in Cirralto land. It's been a very busy period. You've been establishing and developing out all of the necessary capabilities, really to look forward moving ahead. Would love just to hear any final reflections that you had for shareholders who have been following on with the journey, or anything that they should be watching for as you move towards the back end of 2021.
there's a whole bunch of shareholders that have been super supportive, and to those people I say thank you for investing in our vision and our dream, and wanting to come along for the ride. You know, there are a lot of them, and you know, and we really do appreciate the support. It's sometimes a fairly unforgiving world out there, so having those guys, I just want to say thank you to. And I think separately to that, I think looking forwards, you know, what I can say to shareholders is we are having a red hot go at building a global business here, and a global technology business that incorporates payment services, lending, and obviously a software capability that, you know, plays to our strengths. So, you know, keep watching us. We've got a lot to offer. It's certainly at the moment not all about revenue for us, although those fundamentals start to become really important as we move into the new year. But the growth has well and truly started, and we're really looking forward to 2022.
It is always a pleasure catching up with you, Adrian. Love talking about the story, and congratulations on a great past quarter. We'll see where the story heads up ahead for this next final quarter of 2021. Thanks so much, mate.
Thank you. Have a great day, mate. See ya.